Hello, good morning to all and happy new year. I hope that you guys have a great rest during the holiday seasons, and today will be the first trading day of 2024. Good morning. Today is Tuesday, 2nd of January. So before we start our daily dose of market insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. And as well as any forecast, prediction, or projection in this document is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we start our short-term technical outlook, we will have a recap of key highlights and event, and as well as what are the events to look out for today before we actually round up this daily dose of market insights. So today will be a slightly different, given that today is the start of the first trading day of a new year. So let's have a recap instead of key highlights and events. We have a recap of the cross asset performance. That means we talk about the various key asset classes performance and what's driving this performance of these asset classes. All right, so let's get started. So this screen over here, as I show you all, is a cross asset performance. That means a spread of stock indices, various region, as well as commodity markets, gold, and even cryptocurrency, as well as the US dollar index, spreading across the past 2 years from 2022 to 2023, so that you guys have a clearer picture trend of what's going on in the last 2 years. So at the top over here will be the benchmark US indices. It's the S&P 500, the Nasdaq, the Dow Jones, the Russell 2000. So what we could see over here is that in the year of 2022, it actually ended in the red, especially since the start of Q1 2022. But however, in 2023, the benchmark US indices continued to breathe a life of a bullish stone, starting from Q1 all the way up to Q2, driven by this AI productivity team play, and as well as the liquidity backstop provided by the US Treasury on the onset of the US regional banking crisis that took shape in Q2 of 2023. Then thereafter, what we start to see over here in the later part of, or I would say that in the middle part of Q3 2024, all the benchmark US indices faces a kind of a short to medium term risk off scenario. Why? Because of a rise in the US 10-year Treasury yield, threatening to actually put a stop to this easing liquidity condition that was ignited in Q2 on the onset of the US regional banking crisis. But very interestingly, at the start of Q4 2024, we start to see another sign of risk on rally taking shape into the benchmark US indices. So all of them actually rallied, where the Dow Jones Industrial Average and the Russell 2000 starts to play a pretty much catch up. The Dow Jones Industrial Average added 12.5% in Q4 2024, followed by the Russell 13.6% in Q4, that outpaced the S&P 500 11.25% printed in Q4 2024. So this rally itself is actually driven by another round of easing liquidity condition, reinforced by also the Fed dovish pivot, where those were actually recalled in the last Federal Reserve meeting in December 2024, they actually penciled in 3 potential interest rate cut for 2024 in their latest dot plot, up from 2 potential interest rate cut in 2024 that was penciled earlier in the September FOMC meeting. So that actually sparked a rally in bond prices as well. So if you look at the bond prices over here, the US Treasury bond, the investment grade bond, the higher corporate bond, actually all of them rallied in Q4. So what we could see over here is that in Q4 itself, it's more driven by a liquidity easing condition, followed by the lowering of the US 10-year Treasury yield, which led to a sell-off in the US dollar as well in Q4. where the US dollar actually printed a negative 4.5% loss. So the sell-off in the US dollar also propelled rally in the global benchmark stock indices, ranging from the DAX, the UK, and as well as emerging market Asia, and most importantly, emerging market ex-China actually outperformed the US S&P 500 with a Q4 gain of 12.5% versus the S&P 11.24%. So what's underperforming during Q4 in terms of the stock indices will be the China and its proxy. So if you look at the China index over here, the Hang Seng index actually down negative 5.85%, followed by the CSI 300, the China benchmark index is down negative 4%. So the reason over here is that the China benchmark stock indices, the CSI 300, as well as the Hang Seng index, did not benefit from a weaker dollar in Q4. So the reason why the China and Hang Seng index underperformed the US benchmark indices and the rest of the world is given the fact that China right now is facing a structural weakness instead of cyclical weakness. What is structural? Because of this ongoing risk of a deflationary spiral that is still inherent in the China economy. All right, and what we could see over here is that within the benchmark US indices, in my next slide over here, is that this is the breakdown of the annual performance. So we could see that the US stock market is being led by the mega cap stocks. That means the 7 mega cap stocks, adding an annual gain of 98% for 2023. The iShares Semiconductor with 68%. So that actually surpassed the Nasdaq 100 and the S&P 500 with 55% gain and 26% gain, and as well as an equal weighted ETF on the S&P 500 with a gain of 13.8%. So this is what I call the liquidity backstop that is being provided by the US Treasury, instructing the US Federal Reserve to come up with this bank term funding program that allow US banks to actually borrow from the Fed, pledging US Treasury as a collateral. So they actually have a steadily pick up throughout since March 2023 that was first enacted on the onset of the US banking crisis. So what you could see over here is that for sure the ongoing risk on market behavior throughout 2023 as a whole net is being driven by liquidity easing condition, or some would say that liquidity indirect pumping situation by the US Federal Reserve through this bank term funding program. Okay, that actually give rise to this risk on behavior, and also the dollar strength weakness that is pretty much prevalent in Q4 last year. Okay, so what we could see, my next slide over here, this is the US dollar performance across the major popular traded currency. That means the dollar yen, the dollar CNH. So everything will be using dollar as a base currency. All right, so what we could see over here is that the dollar weakness starts to come into play into Q4 of last year. So given the fact that even though the dollar strengthens the yen the most significantly throughout 2023, but the strength of the dollar against the yen dissipated from a high of around 16% gain all the way down, plummeted to only 7.55% gain at the end of 2023. So what we could see over here is that it's a throughout dollar strength weakness across the board. All right, and also being supported by the US 2-year Treasury yield premium shrinkage across the rest of the world as well. Okay, so this is the US 2-year Treasury yield minus the 2-year average spread of German, UK, Japan, Canada, Swiss, AU, and China. Okay, so this is also indirectly being driven by that Fed dovish pivot that was reinforced in the December FOMC meeting. All right, so this is the what I call the team play that was actually played out in 2023. So right now we will actually focus now on the short-term technical outlook, because this is a daily dose of market insights. So we will be looking at the short-term potential movement of the cross asset across the reverse asset class from stock indices, major FX pairs, and as well as gold and WTI crude. All right, so now let us start with the benchmark indices first over here. So let's kickstart with the US Wall Street 30. So US Wall Street 30 continue its short to medium term uptrend. So let me expand my screen over here. Okay, so what we could see over here is that price index going to trade within this minor, okay, give me a minute. Okay, yeah, this minor ascending channel that is in place since 10th of November 2023 low. Pardon me, it should be 2023 low. It's a typo error. Okay, so this is hourly chart and continue to trade also above the 20-day moving average. So what you could see over here is that the short to medium term trend is still pretty much intact. Last Friday, price action managed to dip down and hit the oversold level before rebounding, and right now it's inching above the 50 level mark on the hourly RSI, indicating to us that short-term bullish momentum still remains intact. So from a short-term technical outlook perspective, we will be having a short-term bullish bias on the US Wall Street 30, which is the Dow Jones Industrial Average, using 37,470 as my key short-term pivotal support to maintain this short-term bullish outlook. Why 37,470? Because it confluence with two bullish elements. Firstly, the upper limit of this short-term ascending channel from the low of 10th of November that I draw, you can see over here, and as well as this graphical minor congestion area from 22 of December to 26th of December, retested, now turns into a pullback support as well. All right, so the next resistance to look out for after the break of last Friday's swing high at 37,800 will be 38,100. However, an hourly close below 37,470 negate this short-term bullish outlook to potentially kickstart a minor corrective pullback within its short-term uptrend phase towards the next support level at 36,170, which confluence with the minor swing low of 15th of December and 21st of December, and as well as this upward sloping 20-day moving average as well. So bear in mind, I'm using trading view chart. So in trading view chart, what we can do over here is that we could overlay a higher time frame technical element like the moving average. So this moving, in fact, is a 20-day moving average overlay with an hourly chart of the US Wall Street 30, so that we could do multi-time frame analysis on a single chart, but without flipping from an hourly to a daily time frame. All right, so I'm saving time over here. Okay, so that sum up the short-term technical outlook on the US Wall Street 30. So what's for the higher beta US Nasdaq 100? Very similar price action, but the Nasdaq 100 sought pretty much higher compared. Okay, give me a minute. Yeah, this is the Nasdaq 100. Okay, so this is the hourly chart of the Nasdaq 100. So also still holding within this minor descending channel in place since 4th of December 2023 low, and it's also trading at the upper limit of this channel. All right, why upper limit? Because this dotted line is the median line of this ascending channel, and price action managed to dip down on last Friday, rebounded off from this median line, and with the RSI also exiting from its oversold level as well, and started to print a higher low. Okay, hasn't actually go above the 50 level yet, so indicate to some signs of what I call potential short-term bullish momentum coming back into the picture after exiting from its oversold level and starts to print a higher low as I depict over here. Okay, so indicate to us that this short-term bullish trend is still intact on the Nasdaq 100. So I will not be using last Friday swing low as my short-term pivotal support level because it's too tight. I'll be using 16,590 instead, which confluence also with the 20-day moving average. So as long as 16,590 short-term pivotal support holds, potentially the US Nasdaq 100 could start to see another up leg of bullish impulsive move towards what we call with the next intermediate resistance coming in at 17,150/17,200 level, which is also confluence with the upper limit of this minor ascending channel that is in place since 4th of December low. However, a breakdown below 16,590 will potentially kind of negate this short-term bullish outlook, could kickstart a minor corrective decline within its short to medium-term uptrend phase towards the next support level at 16,160/16,125. All right, so very quickly, we go through the German 30 index. So for the German 30 index, it's going to trade sideways. They make higher high since 20th of December. So I'll be using 16,840 as my key short-term pivotal resistance for the German 30 index to see a bit of sideways movement to retest the lower limit of this sideways range. Will be acting as a support at 16,650. All right, so having this short-term bullish bias within a short-term sideways minor configuration of the German 30 that is in place since 20th of December at 16,840 short-term pivotal resistance, which is the upper limit of this sideways range. However, hourly close above 16,840 will invalidate this short-term bearish bias within this short-term sideways configuration to kickstart the new potential of impulsive bullish uplift of its short to medium uptrend to retest 16,960, potentially sees above it sees 17,500 intermediate resistance coming in next. All right, so that's for the German 30 outlook. Hang Seng Index. So Hang Seng Index actually last Friday, previously we have a bullish bias. It hit the 50-day moving average before selling off today right now. So another day of weakness on the Hang Seng Index, which is the Hong Kong 33 index we coin our platform, down negative 1.74% today. So with that, I'll be using 16,550. Potentially, you may see a bit of slide down towards the range of 16,790, which was last Friday's swing high. Okay, not last Friday, 2 Fridays ago, swing high now turns into a pullback support, and as well it's a zone, as well as the 20-day moving average acting as a support at 16,550, which also confluence with this minor ascending trend line that is in place in 11th of December low. So I'll be using the lower limit 16,550 as my key short-term pivotal support level. The RSI is also now coming very close to the oversold level, so potentially there could be another leg of minor rebound again to retest the 50-day moving average, which is the near-term resistance now at 17,160, which is also confirmed with last Friday's swing high area as well. So using 16,550 for a potential minor rebound to take shape to retest 17,160, provided that 16,550 holds. However, a breakdown below 16,550 will invalidate this minor rebound scenario to see further weakness to retest the swing low of 22 of December and 14th of December that is acting as a next intermediate support at 16,330. So that's the outlook for the Hong Kong 33 index. So that's sum up for the FX market. So let's go to the FX. That's sum up for the stock indices market, pardon me, the stock dollar. So now let's go to the FX market, starting with the euro dollar. So euro dollar, those who actually recall, we do have a bullish bias at 2 weeks ago before I went on leave. So the price action actually indeed hit the resistance level at 111.30, which is actually the upper limit of the medium term ascending channel in place since 4th of October 2023 low. So with that, the price action going to retrace downwards. So potentially right now there could be a sign of a minor corrective setback scenario within its short to medium term uptrend phase. Why I would say that the price action is still in a trading in a short to medium term uptrend, because it's still holding above the 20 and the 50-day moving average, and the 20-day moving average going to trade above the 50-day moving average. So overall, I don't want to use 110.60 level as my short-term pivotal support for resistance for today, just in case of any whipsaw, given the fact that today is the start of the year where we may start to see a bit of we call it higher volatility as in case because of a lower liquidity environment. So there could be a bit of minor wild swing coming into play because of a lower liquidity environment. So I'll be using 111.30 as my key short-term pivotal resistance. Any push up due to lower liquidity environment for today, as long as it didn't surpass 111.30, potentially the euro dollar could still continue to see further potential minor corrective setback within its short term and medium term uptrend phases towards the next support level at 110. A break below 110 potentially exposes 1.0930, which also confluence with this upward sloping 20-day moving average. So i.e. any rebound scenario will be flipping towards a short-term bearish bias, potentially advocating for this minor corrective setback scenario within its short to medium term uptrend phase. However, an hourly close below 1130 will invalidate this short-term bearish outlook scenario to kickstart another round of bullish impulsive uplift towards the next resistance at 112.45. So what's 112.45 is in fact over here the swing high area of 14th of July and 17th of July last year. Okay, so that's the outlook for the euro dollar. So very similar for the sterling dollar as well, where price action actually hit the 128 figure level that we highlighted on 2 weeks ago before I went on leave. So I'll be using the swing high on last Friday, 128.20 as my key short-term pivotal resistance level to look out for this minor corrective, we call it setback scenario. We in is short and medium-term uptrend phases in the sterling dollar. So as long as 128.20 holds in any rebound, potentially the sterling dollar could actually see this minor corrective setback to retest the 20-day moving average, which is also the congestion graphical zone of 126.50/126.30, and as well as the lower boundary of this medium-term ascending channel that is in place since 26th of October low. Okay, only an hourly close above 28.20 will invalidate this short-term minor corrective setback scenario to kickstart potentially another round of bullish impulsive uplift towards the next intermediate resistance at 129.40 for the sterling dollar. Okay, what next for the Aussie dollar? So for the Aussie dollar, what we could see over here is that Aussie dollar, we were bullish last 2 weeks ago before I went on leave. So price action actually reacted off this 68.70, 68.90 level. So what's 68.90? So if 68.90 level is in fact this key swing high area of 16th of June and 14th of July that was then surpassed last year. So this is in fact the high of last year, 2023 high. Yeah? Okay, so this will be what I call key short-term pivotal resistance level, giving us a room for a potential bearish bias setback scenario for today to potentially advocate for this minor corrective setback scenario within its short to medium term uptrend phases towards the near-term support or intermediate support level at 67.50/67.30. We're also conferencing with this upward sloping 20-day moving average, and as well as this pullback support of this former major descending trend line from 25th of February 21 high that was taken out on the 21st of December last year. Okay, so flipping to a short-term bearish bias as well for the Aussie dollar, as well as long as 68.90 short-term pivotal support holds within this short-term uptrend phase. Okay, that is still intact for the Australia dollar. Only an hourly close above 68.90 will invalidate this short-term bearish bias to kickstart another round of bullish impulsive move towards the next resistance at 69.45/69.80. All right. So now, what's next for the dollar yen? So dollar yen going to inch down lower than our expectation, but kind of now hitting a level where we start to see upside momentum coming back into the picture. So very similar for the dollar yen. So this is the hourly chart of the dollar yen. So we'll be using 140.25, which was last Friday's last Thursday's swing low area as a short-term pivotal support for today, looking out for a potential minor counter trend rebound scenario to retest the 200-day moving average that is acting as a resistance, which is a confluence with the minor swing high of 27 December at 14285, and also confluence with this 20-day moving average that is acting as a resistance as well, and as well as this minor descending trend line that is in place since 16th of November high. So overall, flipping to a short-term bullish bias on the dollar yen, potentially looking out for this minor corrective rebound scenario within its short-term downtrend phase that is still intact towards 142.85 as long as 140.25 short-term pivotal support holds. However, hourly close below 140.25 invalidates this minor corrective rebound scenario to kickstart another bearish impulsive down move to test the 17/27 July 2023 congestion zone, which is now acting as a support at 139.20 in the first step. So that's the outlook for the dollar FX market. So overall, we are looking out for a potential kind of a minor corrective rebound scenario coming back into the US dollar. That means minor corrective rebound dollar strength scenario. Gold. So for spot gold continue to remain bullish on the hourly chart. So price action going to stage a bullish breakout above this minor congestion zone on last 2 weeks ago, retested it and rebound, hit our target, hit our intermediate resistance at 2090 before shaping that pullback on last week. And right now it's intending to inch up higher with the daily, so with the day, pardon me, the hourly RSI shaping a higher low and inching above the 50 level mark. So indicate to us that short-term bullish momentum is likely to have resurfaced again on the spot gold XAU/USD after last Friday's pullback. So we'll be instead of using last Friday's low at this level at 2016, which will be a bit too tight for us. So we'll be using for sure this previously bullish breakout retested level at 2047 as my key short-term pivotal support level for today. Looking out, maintaining that short-term bullish outlook. First resistance 2090, a break above it takes up towards 21,117, which is the swing high area of 4th of December that coincide with the fresh all-time high that was printed during the Asia session on 4th December at which is 2149 level. So overall, still maintaining that short-term bullish outlook as long as 2047 short-term pivotal support hold for spot gold XAU/USD. Only an hourly close below 2047 invalidate this short-term bullish outlook to kickstart an extension of this minor corrective decline to retest the 20-day moving average level that's confluence with this minor graphical support zone at 2027/2050. Lastly, WTI crude oil price. So WTI crude oil price continue to rather trade in a sideways fashion, but today it managed to actually stage a rebound and reintegrate above the 20-day moving average right now. And also the RSI starts to shape a bullish divergence after hitting the oversold level on last Friday. Price action doing lower low, RSI higher low, and right now it already also, after that bullish divergence, it managed to hit above the 50 level, indicating to us that there are some signs of bullish short-term momentum creeping back into the West Texas oil. So we were using very closely last Friday's swing low area, which confluenced with the previous intermediate support level of 70.90. We could see over here the swing low of 15th of December and 18th of December, and as well as the Fibo retracement of the last push-up, which confluence closely at 61.8% as well. So 70.90 key short-term pivotal support for today, maintaining that short-term bullish outlook for at least a minor push-up to retest the near-term resistance zone of 74.95/7605 that was last Wednesday minor swing high area that's also confluence with the downward sloping 50-day moving average, indicating to us that the medium-term downtrend still remains intact on the West Texas oil. So what we are doing over here is just advocating a potentially minor corrective rebound scenario within its medium-term downtrend that is still intact, where price action going to trade below a downward sloping 50-day moving average. Now acting as a resistance at 74.95/7605. We call it a near-term resistance zone. However, an hourly close below 70.90 will actually see another down leg to retest this major support level of 67.55/67 level. So that's the outlook for the global asset classes I want to actually share with you all. So what are the key economic trading key economic indicator to look out for today? In fact, today will be a rather quiet day. So we do have a finalized number, December number of S&P manufacturing PMI data that will be out later at 10:45 p.m. Singapore time, and before that we have the UK and the Eurozone finalized PMI data as well out at 5 p.m. and 5:30 p.m. Singapore time. So that's pretty much sum up for today's daily dose of market insights. So today will be slightly longer. Why? Because I did a recap of the key drivers of performance for 2023 across the different asset classes. So with that, have a great day ahead, and we shall speak again tomorrow. Thank you.